This is Eric Mother with Mother.com. Let's take a look at the XLF as we see the market pulling back here, January 27th, 2020. And for the day, XLF down about 1.38%. All right, let's take a look here. Begin with the monthly chart, and based on the uniformity principle, we now have a look here that is not good for those who are bullish. In other words, this is the look that we've been watching for. And because this is a monthly chart, this is going to take a while to play out. But this is where the resistance on a monthly chart that could be a major problem for the market going forward at this rate. What this is telling us is there's a good likelihood that this is going to lead to a major bear market drop. Now, if we take a look at all the data as far as the XLF is concerned, and we can see that the break here is what I'm talking about. That's a big break point. And what we're going to do is extend this line going backwards to test it for validity. And it gives us some of the major stall points going back to 1998. There's a break here. There's another break here. And a break here. All these were major reversal areas as far as the financial space ETF XLF is concerned. And by the way, there's only two major momentum areas as far as the XLF is concerned on this chart. This is number one, and there's another one here where there was some steady upward momentum thrust, and we can even say this one here. Now, all of those areas, as you can see here, do coincide with the XLF moving above the blue line. So all of these are consistent in that this is where we see momentum come in this financial space. So stalling on this line is a big deal. And as long as that's the case, we have to be sensitive to this market standing absolutely bearish. Now, how bearish can it get? It all depends. Take a look at this break here in 2007. We can even do it like that. This line was touching the previous lows. We broke that. We went into a major bear market move. So what I'm saying is, if there's going to be a big breakdown in markets, if markets are going to really see major drops in the months ahead, then the first order of business would be to break below this line here. That would be the first order of business. This monthly RSI lows line would have to break. Since we haven't broken that line yet, we don't know what kind of a drop the market is going to experience, even if the market is dropping, because if the market comes back, finds support on the blue line, then that is going to generate enough energy for a nice bounce. So again, it's all going to be dependent on whether or not we break below this line down the road for determination of whether we go into a major bear market or just a shallow pullback as of right now. On the weekly RSI, also the RSI lows line would have to break before we see a material deterioration of this market. If we take a look at the daily, on the daily we are seeing a result of breaking recent lows on the RSI with this reaction today. Also happens to be moving below RSI 50, hence this big down candle over the last 2 days or so. This is consistent with dropping below RSI 50. Now on the 2 hourly, we can see that the market is doing its best to find support based on recent RSI lows. And it also corresponds with the lows coming off the lows here. And we can draw our uniformity line as such. So those two lines, the green and the blue, are now doing the best to offer the market short-term support, which is what the bulls want to see. And if this market is truly setting the stage for a massive bear market, then on the 2 hourly, this would need to break. This is Eric Mother with Mother.com. As always, good luck, peace, and blessings. E-A-C-S.